Hi there, and thank you for joining us here at PhillipCapital's Market Watch. I'm Phil Gunn, Senior Sales Manager from Phillip Nova. In this episode, I'll be giving an update on the US Federal Reserve's and Bank of England's outlook on interest rates. With rate hikes potentially at their peak and a pause in sight, could this be the beginning of a reversal? In November, the Federal Reserve chose to maintain the federal funds rate target range of 5.25% to 5.5%, which marks a 22-year high. This decision is in line with the Federal Reserve's dual objectives to curb inflation towards the 2% target, while avoiding an overly aggressive tightening of monetary policy. Policymakers emphasize that any future tightening measures will consider the cumulative effects of prior interest rate hikes, the time delays in monetary policy impact on economic activity, inflation, as well as broader economic and financial market developments. During the press conference, Chairman Powell suggested that the September dot plot, which indicated that most participants anticipated an additional rate hike in the same year, might no longer accurately represent the situation. Additionally, it clarified that the Federal Open Market Committee, FOMC, had not yet engaged in discussions about reducing interest rates. The main focus remains on whether the central bank will need to introduce further rate hikes. During its November meeting, the Bank of England opted to maintain its benchmark interest rate at 5.25%, a figure not seen in 15 years, for the second consecutive time. This decision reflects the dual challenge faced by policymakers, assessing the recent signs of an economic slowdown in the UK while grappling with persistently high inflation levels. The Monetary Policy Committee's vote was split 6-3 in favor of maintaining the current rates, with 3 members advocating for a 25 basis point hike. The central bank also emphasized its commitment to maintain a restrictive monetary policy, stands for an extended period to steer inflation back towards the 2% target. They reiterated their willingness to implement further tightening measures if deemed necessary. Additionally, the inflation projections were slightly adjusted upwards, and GDP growth forecasts suggested that the UK economy may have stagnated in the last quarter, with only marginal growth expected in the final 3 months of the year. The Bank of England's BOE chief economist Hugh Peel commented that interest rates might need to remain around their current levels until mid-next year. Beyond that point, he acknowledged that it was not unreasonable for investors to anticipate a rate cut the following summer. Shown here is the daily chart of the pound-dollar pair from MT5. The pair has corrected down from a high of 1.3140 and is now entering a consolidation phase, fluctuating within a wide range of 1.2076 to 1.2622. This represents a potential for range trading with a volatile swings in both directions within the range. The bigger range can be split into 2 portions, with the lower portion of 1.2076 to 1.2406 and upper portion of 1.2406 to 1.2622. It is important to monitor for the potential breakout of the main range 1.2076 to 1.2622, as such a move could signal a trend in the direction of the breakout. Next, let's look at the daily chart of the dollar-yen pair from MT5. The upward momentum has slowed down and we are now in a consolidation phase, testing the resistance in a wide range of 148.52 to 151.63. At present, the pair is still testing the high for potential breakout. Market movements continue to hinge on whether the last anticipated Fed rate hike materializes. If the support 148.52 breaks, we could see a more significant retracement. Nonetheless, it is still important to keep a lookout for any unexpected surges to the upside. Phillip Nova offers forex trading on major pairs such as pound dollar, dollar yen, as well as various cross pairs via the MetaTrader 5 platform. Enjoy zero commission when you sign up and open an account online. Trade on the go with the MT5 trading app on your smartphone as well as on your PC desktop devices with a simple installation. Enjoy 24-hour trading on major forex pairs from as low as 0.6 pips and access daily trade signals provided by Acuity Signal Center on a wide range of assets. There are no maintenance fees and you can monitor your trades wherever you are, whenever you want. And that's all for PhillipCapital's Market Watch. Do remember to like and follow us on social media and subscribe to us on YouTube. Also, tell us in the comment section, do you think that there will be a market reversal in 2024? Thanks for joining us, and we'll see you soon.